Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of July 28th, last week of July, coming up next week. And boy, the hits keep on coming. Pretty decent week, really nice week. My only concern going into next week right now is this pattern that's still playing out. We're having a hard time really busting up towards that 2000 level. And again, right before the close today, I did take a VIX position, and because I am a little concerned about this. The last time we checked in here, we managed to pull off this rising wedge pattern for a break to the downside, and we did real well actually trading the VIX into that pullback. And then that pullback pulled back to the 60-minute time frame, and it was a perfect textbook 60-minute time frame right here in the pullback. So it caused us to get out of our shorts and really to just look for that rotation back up, and once again it played out. It's amazing that time frame has played out over and over again, and it's just something that I continue to say, hey, this is a 60-minute setup here. I'm not going to go against this. So over the last couple of weeks, we've been in this topping pattern. We had this wedge pattern. We had the flag. We called for the breakout of the flag, and we called for the failure. And then we saw the 60 here rotate this back up, and now we've pulled back again. And now we're kind of flatlining here. So just to pick up going into next week, we're in a situation where you might consider this oversold on the 60, but I'm a little skeptical of it, especially on downward sloping flag here. We still have that flagpole, and this is kind of that downward flag. Traditional flags where you have that flagpole and it's a pullback, but you could also see these setups also as flags, and they're usually continuation patterns to the downside. So the combination of just that little pattern and maybe the flatlining here has me a little cautious, enough to take the VIX going into next week. The daily, you can actually see the daily is possibly crossing over, and this still plays out to be a nice rising wedge pattern. So we initially popped through that, but it seems like we're failing again. I am again cautious on this market just based off of a couple of these little indicators that you're looking at right now, and I'm walking you through. So going into next week, the stocks have been setting up great for this week. The watch list is again a killer one, and but the only thing we must say is that I'm going to give you an example right now. We have a fantastic setup on, let's say, Monsanto. Monsanto, you're going to see this on this week's watch list, and you could go back out here and see this trend line. It goes all the way back here, 2013 September, comes back through February, then right through May. And we're right back on it. Normally this would be a textbook setup. But when you have the market kind of topping out, and say the market decides to roll over, we technically fail something and we get some selling or whatever, these stocks that are riding these trend lines will fail. They will break down, and it will cause a little more volatility to come into that trade. And it doesn't mean that this was not the right level to be a part of it, but I'm saying that these levels are great right here, and the only thing I would be concerned about is the market failing at this point. For some, the market, and this comes down to the point I always kind of compare this: what came first, the chicken or the egg? Does the market pull back and pull back the stocks? The stocks pull back and pull back the market? All right, think about that. So this is an interesting level, and I have this set up for this week, and I have some other great ones coming up too. But just to kind of start off here and kind of recap, the market kind of negative going into next week. Just if I had to make a call on that, I'm slightly bearish going into next week, just based off this type and pattern. We're not following through. We're starting to show a little crossover here. The 60 again flatlining, slightly bearish. If this crosses back over and this pops back on, it's game on. It's game on again. So Monday will be a day that we want to watch to see if we just take that VIX off and just continue what we see on the watch list. Because when I start this watch list, you're going to see some great setups. All right. So I sent out some morning notes today. We had some earnings out yesterday, and one of the earnings was Visa. And Visa's always been a good trader. We trade out of the patterns. It works well with everything. And before seeing that the Visa came out and was gapping down here, I decided to chart this one out, put out the notes, and plan a trade out on it. And the trade was to get in between 213 and 212, basically. That was the notes. So you can see right there, that was the notes I sent, 212 to 213. Might look for an entry. So sent that out. We got our entry, And again, by the end of the day, you're going to see how this thing really moved back up here. I'm going to bring this over here. You can see this is another angle of this stock, but I want to show you, great HPS zone. And what the zone was is we got oversold. All right, here's your hourly oversold, just oversold. We have the underlying trend line. So we had all these multiple, indicators lining up to cause us to have an HPS type of zone. And from that point on, I always tell people, this is why you trade. This is why you get up at bat, to swing the bat. This is your pitch over the plate. And I know the market's a very rational and emotional thing, but once you clean out all that emotion, get rid of all that other stuff that clouds your opinion and makes you go against what you're actually seeing, then this technically almost scientific method works. When it's not interrupted by your thought. So basically, don't think, act. But anyway, so we watched this one and we traded this one, and at one point, I want to bring this up to you. This is actually a great example because, I like the HPS the entries here, and the same thing on the exits. And one of the important things I always pay attention to is the patterns that are forming. So I sent out a tweet today as this was ramping up into its wedge pattern. And right at this point here, we took our exit at 214.44. Right up here, 214.44. And it's because of this wedge pattern. I sent out that tweet and I said, be careful of the wedge pattern. It's a short-term sell signal. We're only dealing with the 1-minute chart. But if you're looking at a pullback coming into 3 o'clock, the stock has been nice, probably good. It moved up just a little bit more, and then you can see we dropped off there. So you got to feel pretty good about that. And again, this is a short-term time frame. Whenever you have that 1-minute chart, and this is just a screen capture of this. It's not a it is actually. We could drop that trend line right down here and make a parallel channel, and that would really be your measured move area where you want to watch that price come down to. So now you're still holding on to this channel, and it actually looks good on the 60-minute time frame, but we were able to take a fast little profit on that. And I think it was just, a good way of just being disciplined in your trade. It kind of adds, anytime you do something right and you take a profit, kind of instills that, success breeds success. Type of attitude. You want to continue to do the things that work for you. Anytime you gamble or step outside that box, you just throw away your whole system, and it's just, you're guessing then. You're gambling, basically. Awesome charts today. Just a couple updates. And again, here's Sony. We took Sony off today, and this was, again, I had an $18 target on this, and we got close to that very fast. I figured, what? Great, got over $1 on a $17 stock. So it's just a great trade overall. So out of this one totally, but still like Sony longer term. And I just want to touch base on some of the cheaper stocks we've recently been getting into. ArcelorMittal, the steel company, looking great here. It's still very strong. We had that island reversal back here, moved back up into the channel, chopped around. The slight coil up here is very bullish. This is a directional trade. Like you have a series of lower lows here, and it just kind of coils up. That's usually an extended move. So we have that situation happening here. So we should see this thing extend higher. And that's the only reason I like this. Other than that, I can't tell you exactly how business is on this. I recognize these signals. This a consistent higher low on this that came in here, and that was your divergence. And from that point on, we've just been grinding higher. We're taking out this trend now. We're just about ready to take out the trend. Cliff Natural Resources, new position here. Downward channel. This is high risk too. This is a stock that normally does not play well with others, but you do get those bounces. And this is a pattern trade coming out of a wedge pattern. It came down. There was some news out the last couple of days. It didn't flush the stock. All the bad news I figured is factored in. Watch this one start to build back up. $18. Very easy. You can see $18 on this. So looking at that one, in that one. MT, we did that one. Staples, SPLS, what? Getting bored of this. Chopping around sideways. First notice this good divergence. And typically this divergence, the lower low and the higher low, represents a change of trend. But you can see this has not changed any trend other than sideways. And once you get up here, kind of get extended here, you can easily drop off. And If you haven't been pushing up, this is what we can call a negative divergence, price divergence, where the price is moving up. Well, the stochastics are moving up, the price is moving sideways. And once you get kind of overbought there and you roll over, all that momentum comes in and it pushes down. So I'm not excited about staples right now. It's just not doing anything. But everything else here performing really well. I mean, trading's been great. My beard is off. You know that. My Duncan trade just held it into earnings and it broke down. Beautiful bounce though. I mean, identified the perfect support level back here on Dunkin' Donuts, and I do expect it to push right back up. But that did take the beard away. And but I'm going to make it up for you this week. I'm going to make it up for you. Wait until you see these setups. We're going to start that right now. And again, this first part usually gets released here on YouTube also, so it goes out to people who are not members of Day Trading Radio. And I advise you to become a member of Day Trading Radio and have all this research delivered to you each week, Friday night, for the upcoming week. And like I said before, there's a right way of doing things and a wrong way of doing things. When you step up to the plate, you want to take your best pitch. These are the best pitches in the market. All right, might be for you, might not be for you. But you can't, I don't think you can get anything better. All right. Let's move on to the watch list.